Good morning, Thursday, August 7th. I'm Zach Howard. Here's my morning market update. Quick one today. Let's get back to some quick hits here to start the morning markets. U.S. equities continue to say in my notebook, we are going higher. Higher lows, higher highs. The highest lows, higher highs in the risk range of the S&P 500 since forever. Been doing this notebook tracking for 5, 6, 7 years, and it's never been higher here. Bullish trend, volatility in that VIX continues to melt back again, possibly go down to 15 here today. Is going to bring more buyers into the index. NASDAQ, the QQQ, it's also showing all-time high potential. Those two equity indexes are driven by the big mega caps. NVIDIA, the biggest company in world history, is showing it wants to go higher. Its range is expanding higher alongside Microsoft. Also, the second biggest company jumping into a higher range, potentially going above $800 this year, either today or tomorrow. And Apple, one of the ones that have been lagging those mega cap stocks. Political spin with Mr. Trump yesterday, whatever you want to call it. Mr. Tim Apple out there on the press conference, mega spending in the U.S. when it comes to innovation, AI. Apple's the forefront there. It's getting a boost here today. You want to put it up to these tariff, 100% tariff on semiconductors not made in the U.S., but you look at the SMH inside that ETF, NVIDIA, AMD, Taiwan Semiconductor, pre-market, despite that news, it's showing it wants to go higher too. So all that, if you're looking for a catalyst to why, but the signal says Apple is back to bullish trend and potentially gets up as high as 215, 220 on its range. So those three stocks are going to move the equities higher. Looking on alongside the market, still offsides. People saying they are discounting. This market wants to go higher. Valuation doesn't matter. People keep using that phrase, valuation, yada, yada, not really understanding. There's a 90% implied volatility premium on the SPY currently and 75% implied volatility premium on the QQQs. What do those two things mean? Market participants are offside on these rallies and continue had to make up ground to catch the boat. Let's look at a chart that I had yesterday that follows alongside my theme on the macro regime, stagflation, and how we can use it as potential indicator where the puck's going to go in the quarters and years ahead. Great chart here from Apollo. Torsten Slok over there, chief economist. The green line is the line I talked about yesterday. Prices paid in the U.S. economy, non-manufacturing sector. The services side of the industry are going to pass along tariff. And now U.S. dollar back to bearish trend. Depreciating value of the fiat money means less purchasing power for the consumer and businesses. Thus, things had to go up in price. That green line is a leading indicator of where even the U.S. government reports CPI, even though we know real world inflation will continue to go higher. This is potentially where it's going. Stagflation into the back half of the year. Mr. Bitcoin, my favorite topic. It is becoming a mature asset class. No doubt, not just through the size of its market cap, north of 2.3, 2.4 trillion. Here today, daily risk range in like the 111,000 to 118,000 is topping out. Currently 116,000. I think it continues to chop wood in that range. We don't have these big spikes like you see in the altcoins, predominantly because of volatility. Volatility should be a key component of how you look at markets. And volatility in Bitcoin continues to drop as the asset matures. Lower volatility means you don't have the big up and down movements that you see in Ethereum, Solana, some of these altcoins that have 2-3x the Bitcoin volatility. So yes, it still has 2 times more volatility than gold, which is a currency and is 5,000-year-old money. Still 4.2% more volatility time to time than the S&P 500, the biggest market in the world. But the trend in that volatility continues to melt away. Currently, daily volatility 1.4% thereabouts, 25% annualized. Just look where it was 3 years ago. That makes it more a asset that institutional money can park long-term capital in. I expect the volatility to continue to mature as the market adapts. It is the hurdle rate. price changes in financial markets cluster into zones of high drama, which we see from time to time, and slow evolution. We are away from the drama side. We are now into the evolution side. Don't expect to see the big up and down movements going forward. That's what I got for you today. Outside of Bitcoin, 2 other individual companies in the space I think are interesting. Obviously, Strategy, MSDR, but Coinbase looks very attractive here. I listened to a podcast with its CEO last week, Brian Armstrong, and with Sean Ryan. Check that out. But I think Coinbase has a lot of potential here. Immediate term upside, way more than immediate term downside. BTC all-time hash rate, talked about that last week. We'll see you next week. Going to take tomorrow off. I think it's going to be sunny. I hope everybody has a great end of the week and weekend. See you tomorrow.